Hey, it is Meg Mut here with Century 21, your real estate broker. I am here today with Ann from Seacoast Mortgage and also what's the real estate company?
K&A Realty Investments.
Yeah. So she does investments, any lending, private, all the things that you need. She does it all. So we were just talking in the last video about why real estate is so important in terms of depreciation. Can you first go over what is depreciation?
All right. Depreciation is when you buy an investment property. Let's say you buy a $500,000 3-unit. You can't depreciate land because land stays forever. So let's say the land is $100,000 of the 500, and
Okay.
that would be on the appraisal what the appraised value of the land is. So you can depreciate the 400, the 500 minus the 100, $400,000 is your building. The rule is, per the IRS, 27.5 years. So you take 400,000, divide by 27.5 years, comes out to like 14,500, call it 15 grand. So that's straight line depreciation, which if you remember your accounting, there's accelerated, there's straight line, and then there's the double. But let's go straight line.
I'm like, are you confused?
All right, let's go straight line. 400,000 divided by, well, I got out of accounting, went to finance. So
yeah, she's smart. She's
yeah,
smart.
I didn't like that account. So it's $15,000 a year approximately that on your Schedule E, where you show all your rental income and you're like what you pay for the mortgage interest, what you pay for your property taxes. There's a line called depreciation. What's that? That's the 15 grand, the 400 divided by the 27.5. So to me, it's like a funny number because you're not really writing a check, right? It's just an equation that the IRS allows you. Now, some of you out there are upset with some politicians that don't pay a lot in taxes. It's because they maximize all these IRS rules.
They use the tools that we're talking about right now that you can do.
Yes, anybody can do them. Right, you don't have to be a politician to do this. So you take the 15 grand and you deduct it from your income. So, right, but now what's going to happen? Now, after 27.5 years, what happens?
There's no income then.
No depreciation.
No depreciation.
She was close. We still have income.
We want income.
Right, your tenants are still alive or you got new tenants. So you have no depreciation anymore. To me, as I said to my husband one day, that's a useless property. He had a property from when he was like 21 years old. He kept it for like over 20 years. His accountant was using accelerated depreciation. And he was fully depreciated. I'm like, this is embarrassing.
Which is what? Like what?
Accelerated, that you take most of your depreciation in the early years, like the first 10. So it's accelerated.
But which one should you do?
Well, that's a depends question. That's up to your accountant. Obviously, $1 today is better than $1 tomorrow. But when you sell your property, well, let's continue on with the depreciation.
Sorry.
So if you're fully depreciated or near fully depreciated, so Meg, as you know, you should go after those sellers. Sellers, have you owned a home greater than 25 years?
Right.
Call Meg.
Right.
Because it's useless from a IRS tax standpoint. Now, you might say, Ann, I don't care. I'm all done. I don't want to buy anything else. But if you're still aggressive in real estate and you want to maximize your tax benefit, 100%. You should do a 1030. You do a 1031.
So then you sell, right? So then you call me. We sell your property, and you basically don't want the money to touch you.
Right.
As an individual, you're taxed. You will be taxed. If it touches a person, will be taxed.
Okay?
Yeah. Yeah, it's a lot. You're gonna get paid. You're gonna have to pay a lot, right? So what we do is we allow you to do a 1031 exchange, which allows you to buy more property. And talk a little bit about that. Like let's say you make $500,000, or
well, you sell it for 500.
Yeah.
All right. Well, let's say you sell the property you bought it. Let's stick with the equation.
Right.
You bought this property at 500. 20 years from now, it's now worth 7. Okay. If you were to sell it and not do a 1031, don't think your tax is just 200. It's not. It's 700 minus your cost basis. Now this gets a little confusing. Your cost basis is your 500 less all the depreciation you took. So let's say you took all 400 of the depreciation. Mm-hmm. Your cost basis is just the land. It's 500 minus 4. It's 100. So if you sell that for 7, your cost basis is 100. You're going to get taxed on $600,000.
Right.
You don't want that to happen. So you do a 1031. Now the smart 1031 people, they don't sell at 700 and buy at 700. That to me is like
apples for apples.
What was that?
Yeah.
What was that game that remember it was the coil thing? You're just like forget the name of that game. Anyway, me, I'm just too old. They don't have the game anymore. So, bottom line, what you want to do is take 700 times 3, which is 2.1 million.
Right.
All right. You want to spend go up to 2.1 million. Now, if you can't find that much in property, at least go up double to 1.4.
So let's step it back. So like, let's say, right, you are a seller who has a 3-unit. Right.
Yes.
And then you want to go, and this is what was kind of interesting about the 1031 exchange is like people think it has to be like to like properties. It doesn't. It just has to be investment. So you could sell your 3-unit and buy something like an 8-unit, which is a great option because you don't have a lot of buyers that are able to buy 8 units, right?
Yes.
Or so it's just I think you'll make more money. And you're not going to be spending as much necessarily.
Well, you may or may number of units doesn't dictate that you might make more. We're looking at return on investment.
Right,
don't forget. Yes, you bring in more gross income, but your net may not be there. I'm all about the net.
Yeah, of course.
All about the base. All about the net. Another song. So the net is what we care about. So as long as your return on investment is at least like we talked about the 10%, that's what I like to see for everybody.
Right.
Go buy the 8. The whole thing here though is the depreciation. You want depreciation because it's free money.
Oh yeah, I'm like that's what we were talking about.
That's what we were talking about. Get back on the topic.
But then you could do it for another 20, right? And then you do it for another 27 years, and now it's more.
Yes.
Right? Now it's just 3 times more.
Like I was with somebody the other day, and they're like, "Oh yeah, I did that, Ann." I said, well, "What'd you sell?" I sold a $900,000 property. I said, "Oh, good for you. What did you buy?" I bought a $950 property. I didn't say anything. I went silent. I was like, oh, okay. It was already done. Now, if they hadn't done it,
right,
I would have been yakking.
Yeah.
But I went quacking. I just didn't say anything.
Well, it's just...
didn't say anything.
You're like, it's over now.
It's over. What are you going to do? It's like that call I get. Hey, Ann, I just sold an investment property.
But this is why this is so important. You're like, okay, so like, I should be selling my house if it's depreciated.
Yes.
Right? And then I should be buying 3 times more and doing a 1031
ideally.
Exchange. Maybe.
You don't have to do 3 times more. All I'm saying is when you sell that $700,000 property, just don't go buy another 7. Or don't do a 5 because now it's called cash boot. If you sell a 7 and buy a 5, there's $200,000 left on the table. You're going to have to pay taxes on the 2.
Right.
So that's not great either. Now there's 2 big 1031 companies that I'd like to advocate. I don't have any stock involved, by the way. Asset Preservation, which I personally used a few times, and IPX, which is number 1 I heard the other day. They're a great company as well. And I was with one of the reps from IPX last week, and she said there's still this little, I call it a loophole in the equation. This is interesting. Let's say you want to buy a beach house, all right, and you want to sell a property, whatever, in Pawtucket, all right, $400,000 property, and you want to sell it. You do a 1031 to that beach house in Narragansett or wherever, and you rent that Narragansett for 2 years. Got to rent it, got to show it on your Schedule E, a full 2 years, full 24 months, 2 years tax returns, and possibly 3, got to do the 24 months. She's saying that it's still eligible, this little rule, that you then could take it over as your own second home, and the IRS doesn't come after you.
Done.
I know. And I'm like, wow, they still haven't sealed. They've been talking about sealing up that loophole, but she says they haven't sealed it up yet.
So that's great.
Amazing.
Right? You're like, let's sell it, and let's just if in 2 years even if in 2 years you're like, we're gonna retire. There. Let's do that.
Right. And then if you decide in 2 years you don't want to be there anymore, then do another 1031. Then the 2-year clock starts again, assuming the IRS hasn't put the
we don't know.
kibosh on it. Right, but I would always check before I did it.
Right. So my question then is, like, I think a lot of people ask, like, okay, well, how much does like a 1031 exchange cost?
Well, we're on depreciation right now.
We'll
stay tuned for another 1031's a whole other thing.
Yeah, 1031, we will be talking about that.
But depreciation, the bottom line here, Meg, you gotta have depreciation. You know that commercial, got milk, got depreciation. You need depreciation if you want to increase your net worth, and that's what investment is. It's like mutual funds. Do you just let your mutual funds ride? Yeah, I guess maybe you can. You know, you just leave it on. But when you have an investment property, you shouldn't just let the dollars ride, keep it all on red on the roulette table. You got to look at it and say, from a tax standpoint, am I maximizing my finances?
Right.
Yes.
It's just different places to look in your finances as an investor. What is the next thing we're going to talk about?
Well, before we end this, homework for everyone, look at your Schedule E. If you see depreciation has nothing on that line, 1-800, call Meg. What's your phone number, Meg?
609-598-2232. I can say it in Spanish too, because yo hablo español. 609-598-2232. Nos vemos pronto. Ciao.
Wow, accent and all.